Something unprecedented is happening right now in the British housing market. And if you are a tenant, a landlord, or simply someone who cares about having a roof over your head, you need to understand what is coming. I am not being dramatic. I am not trying to scare you for the sake of views. What I am about to share with you is backed by hard evidence from estate agents, housing associations, and government data that all points to the same terrifying conclusion. The private rental market in this country is collapsing from the inside, and millions of ordinary people are about to face the consequences of a crisis that nobody seems willing to acknowledge. This is not another doom headline designed to grab your attention. This is a warning that I believe every person in Britain needs to hear before it is too late. Here, at UK Property Point, we have spent years analysing the property market, tracking trends, and cutting through the noise to bring you information that actually matters. And I need to be honest with you about something. Over the years, I have seen countless warnings about landlords leaving the market. Every few months, another survey would emerge claiming that property investors were fed up and planning to sell. After hearing this message repeated so many times, even I became somewhat immune to it. I started to wonder whether these warnings were genuine or simply landlords complaining loudly in hopes of gaining sympathy or favorable tax treatment. But everything I have seen in the past 12 months has completely changed my perspective. The data is now overwhelming, and it all points in one direction. The landlord exodus is real, it is accelerating, and it is going to fundamentally reshape what renting looks like in this country. Let me share with you the numbers that convince me this crisis is genuine. The National Residential Landlords Association has conducted extensive surveys of their members, and the results are staggering. More than 40% of landlords are actively planning to reduce the number of properties they own within the next year. This is not landlords casually thinking about their options. These are property owners who have made concrete decisions to sell and exit the market. Hampton's estate agents, who meticulously track property transactions across England, have reported that in some areas, landlord sales now account for nearly 20% of all property being sold. Think about what that means. 1 in every 5 properties changing hands is a landlord getting out of the game. And here is the part that should concern everyone. The number of new landlords entering the market to replace those leaving has dropped to its lowest point ever recorded. The system used to work because when one landlord sold, another landlord would buy that property and continue renting it out. That cycle has completely collapsed. Properties are leaving the rental market and not coming back. To understand why this is happening, you need to look at the fundamental economics of being a landlord in Britain today. The numbers simply do not work anymore for vast numbers of property investors. Consider a typical 2-bedroom flat in a commuter town worth around £300,000. A few years ago, a landlord buying this property with a 25% deposit would have been looking at a mortgage of £225,000. With interest rates sitting at around 2%, monthly mortgage payments would have been approximately £375. If the property rented for £1,200 per month, the landlord would have over £800 remaining to cover maintenance, insurance, void periods, letting agent fees, and still make a reasonable profit. The mathematics made sense. The investment worked. Now fast forward to today and watch how those same numbers have transformed into a financial nightmare. That identical mortgage of £225,000 now carries an interest rate of 5.5% or higher. Monthly payments have jumped to over £1,000. Meanwhile, rent has not increased anywhere near proportionally. Perhaps that flat now rents for £1,400 or £1,500 if the landlord is fortunate. Even at £1,500, which represents a substantial increase that many tenants struggle to afford, the landlord is left with just £500 to cover every expense and provide their return on investment. But wait, because the tax situation makes everything considerably worse. Section 24 changed the rules so that landlords can no longer deduct their mortgage interest from their rental income before calculating tax. Instead, they are taxed on the full rental amount as if the mortgage did not exist, and only receive a basic rate tax credit afterwards. For higher rate taxpayers, this creates a bizarre situation where they can end up paying tax on money they never actually received. The combination of dramatically higher interest rates and punitive tax treatment has turned profitable investments into loss-making exercises almost overnight. The financial squeeze alone would be enough to push many landlords towards selling. But what has truly broken the spirit of property investors across Britain is the relentless accumulation of regulatory requirements that transform landlordism from a straightforward investment into a complex, time-consuming, and expensive compliance exercise. Consider what a fully compliant landlord must now navigate. Electrical safety certificates must be obtained every 5 years. Gas safety certificates are required annually. Energy performance certificates must meet minimum standards and are likely to become even more demanding. Smoke alarms and carbon monoxide detectors must be properly installed, tested, and maintained. Right-to-rent checks come with potential criminal liability if mistakes are made. Tenant deposits must be protected in approved schemes within strict timeframes, with severe penalties for non-compliance. The government's How to Rent guide must be provided in the correct format. Many local authorities require landlords to obtain licenses costing up to £1,000 per property. And looming on the horizon is the requirement for properties to achieve an EPC rating of Band C by 2028, which could mean spending tens of thousands of pounds upgrading older buildings. Each individual requirement might seem reasonable when viewed in isolation. Nobody would argue against electrical safety or carbon monoxide protection, but the cumulative effect of layering requirement upon requirement upon requirement has been devastating. Older landlords, who purchased properties decades ago as pension investments, find themselves completely overwhelmed by the complexity of modern compliance. Even younger, more technically capable landlords report spending more time on paperwork than on actual property management. One landlord told me that it used to feel like providing someone a home while earning a fair return on investment. Now it feels like running a small regulated business with all the stress and administrative burden, but none of the rewards that would justify such effort. The political environment has made everything worse. For the past decade, there has been a sustained narrative portraying private landlords as villains responsible for Britain's housing problems. Landlords have been blamed for high house prices, for poor housing conditions, for the lack of social housing, and for the general unaffordability of housing. Some criticism is absolutely valid. Bad landlords do exist, and those who provide substandard accommodation while exploiting vulnerable tenants deserve scrutiny and punishment. But the broad demonization of an entire sector has created a hostile atmosphere where many conscientious landlords feel undervalued, unwelcome, and actively punished for providing an essential service. When you combine severe financial pressure with overwhelming regulatory complexity and a political environment that treats you as the enemy, the only rational response for many property investors is to leave. The Renters' Reform Bill has proven to be the final straw for landlords who were previously hanging on despite everything else. The abolition of Section 21, no-fault evictions, fundamentally transforms the risk profile of property investment. Currently, if a landlord needs to sell their property or encounters serious problems with a tenant, they can regain possession within a reasonable time frame. Under the new framework, landlords fear becoming trapped with difficult tenants for months or potentially years while court backlogs delay proceedings. Whether these fears are justified remains to be seen, but the perception has triggered a wave of precautionary selling. Landlords who might have waited to see how new legislation works in practice have decided instead to exit immediately while the current rules still apply. They want certainty, and certainty means getting out now. Understanding why this matters requires grasping the sheer scale of dependency on private landlords in Britain today. The private rented sector houses approximately 11 million people in England alone. That represents roughly 1 in 5 households relying entirely on private landlords for their accommodation. There is no alternative system waiting to absorb these people if rental supply collapses. Social housing waiting lists already contain over 1 million households, and construction of new social housing has been negligible for decades. The path to home ownership requires deposits that most renters cannot accumulate, especially when they are already spending 50 or 60% of their income on rent that keeps rising. When landlords sell their properties, those buildings do not vanish from existence, but they frequently vanish from the rental market. First-time buyers and existing homeowners moving up purchase these properties. Housing that once accommodated tenants becomes owner-occupied, and the net supply of rental homes shrinks. Research from Savills indicates the private rented sector has contracted by over 300,000 properties in just 3 years. Some analysts believe the true figure is even higher when accounting for properties temporarily withdrawn while landlords deliberate on their futures. Meanwhile, population growth continues. Household formation increases and demand for rental housing shows absolutely no signs of slowing. We are witnessing a structural supply crisis that will require years, possibly decades, to resolve. The gap between available rental supply and tenant demand widens with each passing month, and no realistic policy intervention on the horizon could plausibly close this gap. The human consequences are already devastating for those caught in this collapsing market. A teacher in Bristol described spending 4 months searching for a flat after receiving notice that her landlord was selling. She viewed over 40 properties, submitted more than 20 applications, and faced rejection after rejection as other applicants offered more money or demonstrated higher salaries. She eventually found somewhere, but it costs £300 more monthly than her previous home and sits 20 minutes further from her school. A young family in Manchester lived through 6 terrifying weeks of uncertainty after their landlord decided to sell, not knowing if they would secure anywhere to live before their deadline. With 2 small children, the stress of potential homelessness severely damaged their mental health. They eventually found a property by stretching their finances to breaking point, leaving nothing for savings or emergencies. These stories are not exceptional. They represent the everyday reality facing millions navigating a rental market that has become fundamentally broken. For anyone watching who currently rents, my honest advice is to strengthen your position now before you find yourself searching in this brutal market. Build the strongest possible rental history with references from previous landlords, proof of stable income, and clean credit records. Save whatever deposit and advance rent you can manage, because offering 6 months up front can make the difference when competing against dozens of applicants. Consider flexibility on location and property type if circumstances permit. Begin searching well before you need to move, because finding somewhere now takes far longer than it once did. And if you have a decent landlord and a property you genuinely like, do everything possible to maintain that relationship and stay where you are. Moving in today's market brings stress, expense, and uncertainty that most people dramatically underestimate. For landlords still in the market questioning your future, understand that the pressures described here are real and unlikely to reverse significantly. Interest rates may decline somewhat, but will not return to near zero levels. Regulatory burdens will continue expanding. The tax position has been permanently reset. If you are holding on, hoping conditions will return to what they were, I would gently suggest reconsidering that assumption. The old model of heavily leveraged buy-to-let generating easy returns is finished. What remains viable is lower leverage, higher quality, professionally managed investment with realistic expectations about returns. This crisis did not have to happen. Policies were introduced in isolation without considering cumulative impacts. Timelines were imposed without proper assessments of consequences. Nobody developed a coherent strategy for maintaining rental supply while improving standards. You simply cannot simultaneously squeeze landlord finances, pile on regulatory requirements, remove flexibility, demonize an entire sector, and then expect continued investment. The good landlords are leaving alongside the bad, and tenants will ultimately pay the heaviest price. This represents a genuine inflection point for British housing. The fundamental economics of private landlordism no longer function for substantial portions of existing landlords. This is not a temporary dip that will self-correct. This is a structural break that will reshape the rental market for a generation. If this analysis helped you understand what is happening and what might be coming, please consider subscribing to this channel. Share this with anyone who rents, owns property, or cares about housing in this country. The more people who understand this crisis, the greater the pressure for meaningful change. Leave your experiences in the comments below. Your stories matter, and they help us understand the real-world impact of these market dynamics. Until next time, this is UK Property Point.